Good day everyone, welcome back to my channel. In today's video we're just going to talk a little bit about fair value gaps, which ones you can use and how I approach the market regarding fair value gaps. So let's quickly have a look. When we are in the bull market, remember we are only looking for buys. So when the market is doing this, we are in an uptrend. We are going to measure the low that was created to the high. Now, we are only looking for fair value gaps that's below the 50%. So as soon as the push up is created and the retracement is happening, you are going to look for a fair value gap in the 50%. In this video, we are going to use the fair value gap closest to the most recent low. So in this case, it will look something like this. There's a fair value gap. Then we continue. As soon as price takes out this high, we are going to measure now the last valid low to the high when the retracement starts. So, for example, you can measure if price is doing this and then it goes up. You just drag your fib literally as soon as the price starts retracing. You can use that as your most recent high. So in this case, we just go measure from this low to this high. Price needs to come into the 50%. If there's a fair value gap closest to the low, remember your stop loss when you enter is going to be below your most recent low. As soon as price takes out this high, you're going to do exactly the same. You're going to measure it below the 50%, enter on your fair value gap stop loss beneath the low. As soon as price breaks this high, you do exactly the same, measure it, enter from a fair value gap. In the crash market, everything works exactly the same. If you are in a downtrend, remember you don't buy in a downtrend. So as soon as price breaks this low, you're going to start measuring. As soon as price comes back in above the 50%, you're going to enter from your fair value gap and your stop loss is going to be above the most recent high. As soon as price breaks this this low, you're going to measure. As soon as price comes back in above the 50%, you enter from the fair value gap. Sometimes this is going to happen where your fair value gap closest to the high is not going to be tested and you are going to miss the trade. So that is going to happen as well. Alright, so let's go into some charts and see some examples. So as you can see here, we were in a downtrend. We created highs, lows. We got a market structure shift there. Got another push. So that validates for me the shift is changing. The market is changing. So now, again, we broke this high. We are going to measure it from the low, the most valid low, recent valid low. Price never came back to the 50%, so we extended. Okay, price came back into the 50%. There it came back. Now where's our fair value gap closest to the low? It's going to be this one. You enter on the fair value gap and you're going to put your buy position on, your stops below the low, and you're going to target the next level of liquidity. There's your first trade. Now the next one, we're waiting for price to break this high now. So where's the most recent low that was created? It was this one here. So we're going to start measuring from this low to this high. It's not on the 50%. Okay, it's starting to retrace, touch the 50%. Where's the closest fair value gap to the low? It was this one here. We didn't get tagged in, just missed our entry onto the next trade. What we need to do now, this was our most recent high. Price took it out. Price took it out. This was our most recent low. So we start measuring from there to there. Price tapped. Where's okay? So price went up. Remember, at this stage, this already happened, so I'm not taking this into account. Only when the high is broken. So from here, starting to look. Okay, tapped our 50%. So now we can start looking at where's the fair value gap. There we go. So price came up, tapped the fair value gap. We in our trade. We broke this high as well. We're still in our trade. Remember, stop loss beneath. So when you enter there, stop loss beneath the most recent low. So what you could have done, you could have taken your first trade there. Nice and quick trade, 1 till 3 risk to reward. Now what happened here? Let's quickly delete. Just delete this one. So you got your trade there. Now this was your most recent low. You measure, tapped our 50%. Where's our fair value gap? There we go. Trade got entered. Our stop loss below the most recent low. We got stopped out. First losing trade. Now we're waiting for this high to be taken out. Got taken out. Where's our most recent low? As soon as this high got taken out, the most valid low. So in this case, it can be because price took out this low. We got a market structure shift there. First push, second push. So I will actually use this as my valid low. So I'm going to measure from here till there. Price came down, tapped into our 50%. Where's our closest fair value gap? It's going to be this one there. Price is playing around. Remember, if you enter here, stop loss below the most recent valid low. This is not a really good risk to reward trade, but it's still a winner, so it's more like a 0.8. It's not a base risk to reward, but it's a winning trade. Price took out this high there. Market is a little bit choppy, so I'm going to measure it from year to year because this is going to be my most valid low. Price came down, but there was no fair value gap, so no trade. So now I'm going to leave the market because there's not a big push up. Here we can find a big push up again. We broke this little high here, impulse move. So I'm going to measure from this low to this high. Price came down, tapped our 50%. We got a little bit of a reaction. Where's our closest fair value gap? It's going to be that one there. Tapped in. Remember, stop loss below the most recent low. Target the next high. 1 till 3 trade. As you can see, beautiful trade. Now we're waiting for this high to be taken out. got taken out there. So you measure from here to there, didn't tap our 50%. Now we put it there. Okay, we came back to our 50%. Where's the closest fair value gap to the low? It's going to be this one here. Never got tagged in. Okay, we broke this high here. This is going to be our most recent valid low. So we're going to start measuring. Price came down, tapped our 50%. Where's our fair value gap closest to the low? It's going to be this one here. We got tagged in. Let's just drag it out. Let's see if we got stopped out. Tagged in. There we got tagged in. Stops below the most recent low. There we go. Price went down. Just stopped us out. If you want to, in this case, I would be taken out. If you want to put your stop loss more, you can. You would be safe. I got tagged out on this trade. Stop loss hit. Price went against me. So that's a losing trade. So let's quickly see what's happening here. So we got our low, we got our high, okay, low, high. So now we're starting to make lower highs, lower lows. Price went make another higher high, came down to make a lower low. So in this case, you can see, if you look at my different videos, if you look at my other videos regarding liquidity and what I'm looking for, you would see, okay, this was a liquidity sweep after you got taken out. Okay, price broke this higher high. So that's an indication for me. I'm anticipating price is going to go up again. So let's quickly measure. And we got a market structure shift here as well. From this low to this high. Where's our closest fair value gap to the low? It's going to be this one here. So price made the high, start retracing, tap to 50%. Now I'm looking for the closest fair value gap. We got tagged in, stop loss below the low, valid low, and we target our next level of liquidity. 2.1 risk to reward trade. Beautiful trade. And it goes on and on like this. You can do it. But you need to take into account market structure. Highs, lows. Now we're still in the uptrend. Low, high, low. Didn't take out that high. Market structure shift. Low, high. So now we're in a downtrend. Now we're not taking any trades. Now again, low, high, low. Took out this high. All right. Let's say we don't have a trade here. Made a higher low. We took out this trade, this high. So this is confirming for me we're changing trend again. And then you can start repeating the progress. Let's quickly go to a crash pair. Alright, so now we're on crash 1000. I'm on a different time frame as well. The 1 hour, yes, of course, you can go into more detail when you start on the higher time frames going down, but I'm just showing you it can be done on any time frame. So for this example, literally, we are in a downtrend, high, low, high, low, alright, high, low. We broke this low. That one took that one out, so this is going to be our, going to measure it from here. Where's our closest one to the high? It's going to be there. Got tagged in, stop loss just above it, and we got stopped out. So let's quickly look. Created a low, This was our high, so high, we're consolidating, took out liquidity. There we go, created a high. Didn't take out that high, we broke this high. So now we're going to start measuring again from this high to this low. Where's the closest fair value gap to the high? It's going to be this one here. Stop loss above the high, and you target the next level. Liquidity, wait for the low to be broken. 2.1 risk to reward. Okay, so now we broke this low. Where's our most recent valid high? It's going to be this one here. Start measuring, start measuring, start measuring. Okay, price started to retrace, We tapped the 50%. Where's our closest fair value gap to the high that hasn't been tested yet? There we go. Price never came to our price. All right, now again, we broke this one here, so this is going to be our high. So let's see, start measuring, start measuring. It's not retracing to the 50% yet. Not yet. So there we go. So now we can use this as our low. So let's extend it. Where's the closest fair value gap to the high? It's going to be this one here. Just extend this. As you can see, it came. We entered our trade here. Stop loss below, above the high. Target the next level of liquidity. That's going to be that one. Price came. At this stage, you as a trader, it's your own decisions. Are you going to go break even? And we got stopped out. Alright, so high, low, high, low, high. We broke that low, so it's market structure shift. Let's see what's happening. Got a big impulse move. We start, okay, second impulse move. So now we took out this low. So now we can start measuring from this most recent valid high. Start measuring. There we go. We tapped our 50%. Where's the fair value gap closest to the high? It's going to be that one there. Going to get into my trade there. Stop loss above the high. Target next level of liquidity, 2.4 risk to reward trade. And it goes on and on like this. And then this is where market structure plays a big role. As you can see, market structure is changing. So you are not taking any trades because we are on the bigger picture. We are in an uptrend now, as you can see. We're only going to get into trades again as soon as structure shifts. I also have a detailed course on how I trade boom and crash. Link is in bio if you want to go check that out as well. But awesome, I will see you in the next video. And then yes, enjoy and good luck. Awesome.